the RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. This is our public podcast. Of course, I'll do maybe 15, 20 minutes, something like that. It is 3 minutes past the top of the hour. So if we're approaching the bottom half of the hour, then I've been talking too much. We will have, of course, our broiler chicken show on Sunday, which is a good couple hours. And that's actually not a bad AMA session. And then, of course, if you do ask questions in that session and I can't get to it, we'll roll them over and address them Monday morning's show. Does look like actually the market's relatively happy here. And I gotta say, from a January Barometer perspective, I think the street was kind of opening up the year in a sanguine mood. And of course, we have our expectations of what typical election years look like the first half. But, you know, we've had a bunch of data points come out here recently that have been relatively positive. So as a result, market just keeps catching a bid. Was in a crude long this morning and feeling pretty chipper. Of course, we're trading the opening range trade on a regular basis. And I suppose I'll give you just a view of what my day's been like here. We're long, took profits, left a little bit of money on the table, a little sloppy there, but nonetheless, not a bad day. It was interesting actually to see my trading partners trading the big boys, and I'm just trading these micros on this fun little demo account that I'm doing on Top Step, just to sort of demonstrate best practices. And he got flushed out on this move right here, but it never did hit my stop, and I had discipline today not to move my stops. And the market took off to the upside like a rocket, and I was looking like an absolute genius. Then at this point, I was kind of like, you know what? I've got my stop at scratch. I'm just going to let this thing breathe. I'm going to go get some breakfast. And actually, I was sitting listening to Tucker Carlson just came to my country and was met with huge audiences. And of course, we can talk about that later on. I mean, you've heard me go on at length about my crazy country right now. It's pretty sad what's happening here. But, you know, ironically enough, if you're a student of mine, then you know that actually these commodity countries, and I mean, you see what the fuck's happening in Russia. What a disaster that is. You know, they were a short in 2018. And what's really sad about what these socialist commies are doing to my country is, of course, they won't let the prices break. So what they are doing is they're collapsing the purchasing power of the currency. And of course, this is also happening across the entire Western world as these, bankster crooks that, of course, floated all this debt. They don't want to take losses on these bonds, on this debt. So easiest thing to do is just hyperinflate the economy. And of course, you know, you've listened to the guy down in Argentina. I mean, he's had to live 30 years of this, and they've just absolutely had enough. So much so that they're like, oh my God, just put anybody in power that's not these silly communist, socialist yahoos. You know, and actually it's interesting. What's the differentiation between a communist and a bankster? In a weird sort of way, actually, they're incredibly correlated. But anyway, it's another political conversation for another day. Point here is, according to my trading plan, I'm supposed to spoon feed the market at levels and then see if I can establish a free look and then just let the market work. And this happens to be one of the scenarios, and it does happen. It's just a trader's life where we came back down and I got stopped out on my runner at scratch. Shit happens. If anything, probably not a bad idea to have that stop in place. If I was still long this contract, of course, I'd be like, oh, what have I done? It's the end of the world. Yeah, interesting price action here in crude oil today, to be perfectly honest with you. And I suppose in a weird sort of way, this is actually the same commentary as Canada is a short, Russia is a short, Australia is a short, because their economies are based on commodities and commodity production and of course commodity purchases. Now, do you think China's buying up a ton of commodities to build three gorgeous dams these days? Or how about ghost cities that no one will ever live in, building like 100 different 30-story high-rise buildings that never even get half completed? I mean, it was, oh, look at that. I've already banged into first 5 minutes. So thank you, Chris. So, we are in the anti-commodity cycle right now. So I guess it shouldn't surprise us that commodities, generally speaking, not so happy. I will say though that stock market's resiliently strong here, um, considering the tumult of the world right now. And I suppose the question is why, and that's sort of the big purpose of this conversation I'm supposed to be having with you guys here this in these free broadcasts is what the heck's driving things here. I didn't do a video yesterday. I hope you enjoyed Julian's offerings. I was watching the data points. Of course, I do trade crude Thursdays with Chris. Got stopped out for a loss there yesterday. Boo, his boo. But maybe what we'll do is we'll just hit the actually, this is the Wayback Machine. Sorry. I hit the Wayback Machine. Yesterday's data points, very early in the morning, had a whole bunch of econs come out. U.S. growth. I've told you guys this before. I don't know whether anybody believes me or not, but I sure hope you guys learn this. 2018 was the commodity cycle pivot. And then, of course, we went through that insanity of the Jupiter Saturn cross. And I think what you have to do is you have to respect that 35-year cycle, the generational cycle, but then put it in the context of the Jupiter Saturn cross, because that, in essence, is sort of the pivot how we humans behave. And it makes sense. It really, in my opinion, it makes complete sense. Although, it might take you 20, 30 years of watching this stuff to fully appreciate what it is that I see. Anyway, point of the matter here is we're now into a greed cycle, which means you should be bullish of growth. And of course, the world's economic engine is the United States of America. So it really shouldn't surprise us to see US economic data coming in very, very strong once again. Like literally like a 50% higher than what the talking is. You would think that on a quarterly basis, the analysts on Wall Street that get paid 6 figures, 7 figures, drive their Maseratis, Mercedes, Rolls Royces, whatever, they're so fucking rich. You would think that they wouldn't make such an egregious error as that. I mean, that is a huge miss when it comes to, what did the market expect and what actually happened last quarter. That's a big, big number. And then we also talked about the previous quarter was an even bigger. I mean, the economy is not supposed to grow at 5% annual rate. I mean, that's going to be inflationary. Oh, what a big surprise. We're all dealing with crazy ass inflation right now. But, actually, in an interesting sort of side, I suppose, what's driving the market today? Well, we did have inflation numbers come out. They weren't knock the cover off the ball great, but they were relatively benign. 0.2% for the core PCE. And of course, this is the Fed's favorite indicator to follow. Did tick up from the previous reading. So, that's a little bit not good. But, in that 2.2% month over month, which of course, if you annualize that, then that's going to be like, 2.4, right? So there's your PCE price index year over year came in actually 2.6. So this probably is a number that says to the Fed, look, we don't need to keep cranking rates higher. We actually have the rates well above this sort of, PCE, personal consumption expenditure, whatever inflation index you like to use du jour. So if anything, what the Fed's probably saying is, well, we've got rates at restrictive. We're going to keep rates relatively tight until we actually see something break. And given the strength of the U.S. economy itself, like yesterday's actual GDP data, there's no signs of anything breaking here. And if anything, if the Fed goes and lowers interest rates in the face of this, your inflation problem is going to come back just like gangbusters. I think what does need to happen is, idiot places like China need to break because they're the whole facade of the economic landscape there was just built on fraud, built on just never-ending borrowing at ever lower and lower interest rates. Obviously, that story is previous cycle, and hopefully, you can now start to see how the interest rate cycle has completely pivoted on that Jupiter Saturn cross, and we are now in a completely different world. Um, there you go. 10 minutes in. That's good. We're only 15 minutes in. I got another 10 minutes to go here, roughly. um, so inflation numbers came in relatively benign. Now, as I've been sort of talking to you, through the month of January, as sort of a market old timer, I really like to follow what happens through the month of January is going to portend for the rest of the year. I gotta say, folks, I mean, there is the beginning of January. That looks like a chart going from the lower left to the upper right. Still don't see any signs of break. You can see I was kind of, I don't know, anticipating, maybe even hoping. I don't know whether hope's the right word or not. Some sort of top in here, but we just made another new high. Public's actually long a lot of stock right now. I would imagine that there will be some sort of seasonal pullback. The old cliche in the market goes, buy your fill in the blank, middle of February, sell it the middle of May. You made money 9 out of the past 10 years, kind of thing. And when I was a commodities broker, that was the sales pitch to buy unleaded. I suppose with energy coming back down here, it's going to set up a really nice little buy window there in the middle of February. But don't see any signs of quit here out of the stock market just yet. So I don't know whether I really want to be getting too uber bearish. And if I'm not mistaken, I think the algo actually flipped back bullish again. I suppose if you are an algo trader, live by the sword, die by the sword, this will drive you crazy. Sometimes algos do this, where we're sort of, we're kind of flirting mid-range. But we were kind of back and forthing. But gee whiz, are we going to go put in a W here? And we're going to go through another face rip cycle here? I've always said I don't like the idea of getting into the business of predicting the future. I think if anything, you want to trade your setups, have three unrelated reasons to justify taking a trade. Just live with the results. Try to make sure that if you are right, you get paid 2+ times what you would lose if you're wrong, and try and make sure that your system is at least at least 50% accurate. Ironically enough, at 2-to-1 risk reward, your system only needs to be accurate 33% of the time just to break even. If you're right 50% of the time, you make money. If you're not right, if you're right, I think with rational analysis, we can get that number up to 60-70%. And of course, that leads to crazy claims like, I can turn $500 into $1 bazillion. Look at me. Woohoo. Just slow and steady wins a race. Just probably the hardest thing out of all of this is you just have to figure out what works for you as an individual and then concentrate on process goals, right? If anything, this whole example, what happened in crude oil today, this is a process goal win, absolute unequivocal. Followed the process goals absolutely to the T. Could I make a rule that says if I'm up $1 bazillion and I see a double top come in at things like Feigenbaum levels? Actually, it was really interesting looking at the crude oil from a USO perspective. We went up and cleaned out the old high at a 2.618 and then fractaled out. And you can see it was the same thing on the crude oil futures contract. if that's going to be my rule going forward, well, then okay, great. I can always go in and alter my trading plan. It's not the trading plan right now. The trading plan right now is on the runner, have your stop at scratch, and just live with the results. From a process goals perspective, this is a total win for me today. Yeah, it is what it is. I suppose turning our attention to crypto, finish the conversation over on that note. If you thought the stock market was happy, woo boy, look at crypto. Crypto tastes great. Of course, you could make the argument, and I have repeatedly with you people, and I hope somebody's hearing this message. If energy is weak, and I actually heard overnight that natural gas prices in Europe are collapsing. They've really got the Russians on the fucking ropes here. It's quite remarkable to see. The Ukrainians now are doing drone strikes on all their oil exporting facilities. So Russia now, if the spigots start turning off for Russia and they can't even sell oil to China and stuff, oh boy, are they in big trouble. But anyway, that's another conversation for another day. Point here is, if energy has topped out and energy is coming off, well, technology, oh, what a surprise. There's a W on the NASDAQ. And beloved Bitcoin and crypto, highly energy sensitive, we'll say. Looks like the whole damn market's catching a bait here. Woohoo! Awesome. Interesting to also to see Bitcoin itself seems to be outperforming now. So the alts, I think, are still trying to stabilize and finish off this conversation with you and look at a couple charts. We've talked repeatedly about this chart. Of course, our price target coming out of this consolidation, kind of like what I just showed you on the USO and the crude oil contract, 2.618. Actually, I just clued into something which I thought was totally funny, and I didn't even think about it earlier, but it makes, if anything, it's so absolutely poetically perfect. There's somebody online, I still don't really know who the person is, but they're making NFTs of people that they figure are half decent traders. I think the jury's still out on me, but anyway. And they put an NFT together. I don't even know how this stuff works, but anyway, Brian, I think it's House of Bulls or something like that. And they gave me 2.618 SOL. When I saw that number originally, I was like, well, I wonder why they did that. But anyway, and then after a while, I was like, oh, duh. If anything, that's perfect. It's so poetic. And really, it would be awesome if that just stayed exactly at that level forever. That would be great. Also, sort of speaking of DeFi and all this, not frankly speaking, I don't know what any of this shit is. It's just incredible how it just keeps coming. I've been explicitly told, do not click on any of these links. So anyway, but I did participate. These are all the fun little SOL tokens that I've been buying, and I think I've told you my goal here initially. The value of this thing was $300 when we started out. And of course, I've spread the jelly out. Some have moved up, some have moved down. And then if I actually do bang out doubles, I want to work this number. And you can see I've banged out 3 doubles so far because each trade's $25 because the original starting balance was $500. So that's that 5% risk number. And of course, I try to just be a demonstrator of best practices for you people. But anyway, point of the matter here is I banged out 3, and the goal here is to get this sort of cash balance, whatever the hell you want to call it. This is the sort of the stable coin du jour. And if I'm not mistaken, I think Goldman Sachs owns this. Goldman Sachs owns the U.S. government. So it doesn't surprise me. This will probably become your CBDC token, and you don't even realize it's already happening. But anyway, point of the matter here is if I can get that up to $500, then everything else is gravy in this. So I've got, and it's basically 20 doubles, right? 5% times 20 takes you to the original capital amount. And I've got 3 off so far, and I've got a lot of irons in the fire here now. Some actually look pretty darn respectable here. And I've just been buying stuff that people on the site are kind of like, hey, this one's kind of interesting. This one's kind of interesting. Some have done absolutely horribly. But you can see I was squawking about my boner the other day, and it looks like my boner's getting a little stiffer here, so that's good to see. if anything, fantastic example of Boner kind of lost his boner a little bit there the other day, and it actually gave you an opportunity to sneak in off the original double bottom. And that's probably a really nice 78.6 fib level there, or what we call a shark setup on the site. But anyway, that's not really the point of this. The point of this is we've been using this Jupiter platform thanks to Steven, and shout out to Steven. He's the one who's got me on this, and love him dearly. Our harmonics guru on the site, and he runs the harmonics room. And you level threeers, if we're lucky, we'll get a nice presentation on harmonics here from Steven in the next few weeks for you guys. But anyway, point here is that they had their airdrop. I think that's what this thing's called. Anyway, so this was probably my highlight of my day, because we have Stuart on Tuesdays, our CTO, and he's our basically our crypto whiz. And he's made it an objective of his that he is going to build out sort of the airdrop wallets, all this kind of stuff, part of his Tuesday presentation. I think it's a fantastic sales pitch for you to come on the site and be a part of our community. That alone is worth $20 a month subscription just to get an update from Stuart on what wallets are hot and what he's doing. But point here is this is an example of one of these. This is called an airdrop, isn't it? Chris, are you still here? Right. So I went and claimed my win here today. And frankly speaking, I don't want to touch any of this. I don't want to touch this until November of 2025. So let's maybe even post a comment in the comments. Can Brian actually hold on to this? And can I show you a screenshot that in November of 2025 I sell all 643,000 of these things, and whatever the ancillary stuff is that pops up from this on that November 25 cycle event peak window, because that's when I think this next cycle will ultimately end. So we're now into the airdrop wallet thing. Woo, party! Anyway, Stuart was pretty excited what I showed about this morning. I don't know what the hell's going to happen here, but I do know, if anything, I was thinking about this. Now I get a better understanding for why, FTX did what it did. Celsius did what it did. Luna did what it did, and all this. In that, just trying to, because keep in mind, I'm an old timer. I'm like, buy, sell, hedge, right? That's my gift to all this. I don't understand this technology stuff half as good as you guys. But, with this incentivized, you have to own Jupiter or you have to use Jupiter or whatever, I have to own these, I have to have these coins staked to get the airdrops in the wallet. Now you can sort of see, well, this actually makes sense. It's incentivized to bid up these markets. I can understand the capitalist process. The only problem is when the cycle ends, sadly, that's when the public is most excited about this. That's when, you see these absolutely insane APIs, because they're taking into account just absolutely insane price appreciation into the cycle peaks. Public comes in and just, buys everything right at the top of the market. Cycle rolls over, and all the airdrops and wallets and all that kind of stuff, all that ends. And sadly, of course, the smart money is getting the hell out. So you can actually see how the mechanics of these shitcoin cycles work. And, just hanging around the TRI site, I've actually noticed a lot of people are, where are we here? I want to show you the Jupiter. Yeah, a lot of people are getting set up on this thing. And actually, I was even asking Chris, and Chris even said, Brian, I kind of like your boner. What? No, he didn't say that. Anyway, just try to put a smile on your face. So there's your report for today. Maybe go look at some boners if you feel like it. Not a sexual reference whatsoever. What I do find fascinating, though, is that for some reason, this Step Finance doesn't like my boner. Like, what the hell? Why don't you like my boner? So anyway, you can see some of the names I got on the books. And look at, I mean, you can just see these little, actually there's Guak. I think this guy's trying to bottom as well. So maybe take a look at it. But we have fun, especially with the weekend coming up here. We'll have fun playing in crypto land. And as I had originally sort of tried to intonate, and actually the total I think makes perfect sense. About, I don't know, about 4 or 5 days ago, after we had that sort of blow off top there into that ETF event, and then we had the immediate dump right back down into 13 EMAs. I put these two lines on the chart and I said, welcome to your new trading range. Notice the 2.618. This is basically exactly what chaos looks like. So, I mean, should we oscillate around this 2.618 level for a while, but whether we decide whether we actually are going to top out, or maybe this is a midpoint consolidation, and the midpoint consolidation does nothing more than set us up for a bull. Whoops, that's not what I wanted. A bull ABCD to take us the next leg higher. It's totally possible. I don't say, again, I don't like the idea of getting into the business of predicting the future. If this thing does M out and all the momentum indicators are in divergence, well, then that means, we're heading back down. If this thing goes and W's out and puts in 3 higher lows and the indicators are starting looking bullish again, fascinating. You can see A, B, C, D takes us up into the next chaos level. Oh, what a shock. So, it is what it is. I have fun in the market. That's probably the biggest thing. And really what I've said there a few minutes ago about the crude oil is the most important thing about all of this. Forget about the money. Concentrate on process goals. Am I following my plan? I am only as good of a trader as I am able to follow my plan. Do I have 3 unrelated reasons to justify acting in the market? And have I looked back over time and have I seen, or even watched it in real time? Have I seen, has my subconscious, does it believe that if I see these 3 unrelated reasons, then I see that at least 2-to-1 risk reward metric work out, where if I'm right, I get paid a couple bucks, but if I'm wrong, I lose a buck. And I can be at least right 50-55% of the time. You get up into that 60-70%, you are making more money than you'll ever need. That's the secret to this game, folks. And if anything, I think that's an excellent note to end this free broadcast on. PMA for the win. Slow and steady wins the race. Don't take no wooden nickels. Remember what your number 1 job is? Only love Brian said to you good people is. Bye for now.